with Mmxm. All right. So first is going to be power of three and uh, basically expansion candles and how they form, how indecision candles form. This is very important because all we want to be involved in is expansion candles. We don't want to be involved in indecision candles, none of that. So first, I want you to look at the charts and look and see what every single expansion candle has in common. They all have a small opposing wick. So if we go to the charts and look at expansion candle, right? Small opposing wick, right? Small opposing wick, kind of like a indecision candle, right? You have the small opposing wick, small opposing wick, small opposing wick, small opposing wick. This is important because what I'm gonna teach you guys today is you're gonna trade the day after we hit a key level, okay? And that's when we usually reverse, right? So where is my drawing at? Okay, so like this. So pretend it's a key level here, right? We're gonna trade the day after, but only if it creates this small opposing wick, because that's how expansion candles form, right? So there's really two ways a reversal can happen. Like if we go in the charts, there's only two ways, right? You have this kind of indecision kind of looking candle, and you have reversal into expansion. So let me try to find one for you, kind of like this one, right? So this can be the first candle, but um, it needs to open up near the key level. See how we're opening up near the key level? So what this does, it allows the opportunity to create that small opposing wick to then be an expansion candle. Does that kind of make sense? Um, and if we just look, let's try to find an example, right? We hit this key level. I don't even know if that's a fair value yet, to be honest. Okay, it is, right? So usually, though, we're going to expand the next day. This is when you get the real expansion, right? This day, or this day hit the key level, the next day we expand. Uh, we can even look at this order block, right? Hit the key level, expansion, and then we sweep this previous hit low, whatnot. We could even look over here. They're really good examples over here, actually. All right, so this week right here, hit the key level. Next week, we expand. What do we look for? Small opposing run, right? And then we create an order block. We expand into the order block, right? And then I'm gonna teach you guys how we trade off of reversal. So this is a reversal candle, technically, into expansion, right? Because it swept the previous week's low. All right, so first, you need to understand this. So my rule is I will trade the candle after, right? But it's only, like I said, if it creates a small expansion candle. Once it really starts to expand past the daily open or beyond the daily open, I know that this cannot be a bearish expansion candle. It's like impossible. Only thing it can form is an indecision candle at the very most. So this is important for all candles because uh, even like the next day right here, I don't want to see price expanding, right? I don't want to see price going way up here if I'm going to be bearish. Why? Because it's starting to eliminate the possibility of it being a bearish expansion candle because it's creating that large wick. If we then went bearish, look how large this wick would be, right? And we're not likely to create a large expansion. If we are going to close bearish, it's going to be like down here or something, you know. It's not going to be an expansion candle. All right. Hey, these dogs. Uh, but yeah, does that make sense, everyone, or not? Whoops. And so if you look here, if you watch T-Trade's video, he says in one of his videos, I think it's like next day model maybe or something, how we frame reversals off of previous candles highs and lows. This is only when we inside of a key level or after hitting a key level, right? So we hit this key level, pretend this line is a key level, and there's only two ways we're going to hit a key level, right? And I'm counting candle one as the candle that hit the key level. It's either going to be an expansion candle or it's going to form a reversal candle. Okay, so if it forms, let's just pretend, let me make this lower. I gotta bear with me here. All right. All right. So it's only gonna look two ways. It's gonna look this way, or it's gonna look this way. All right. So it's either gonna form a reversal candle or an expansion candle. Now I wanna frame a reversal either way. The next candle. Um, And it doesn't even matter to me which candle it is, because if you know ipsicycles, we can expand into a reversal, right? This is already the reversal. This candle here, this would be the expansion into reversal. Like I said, it can form two ways. Um, and yeah, I want this candle I want to turn this next candle into expansion. I don't really want to see this high being broken, right? Because inside of this wick, you're gonna have a smart money reversal and all that. That's enough yapping about this. Does that kind of make sense to everyone? I hope I explained that like decently, bro, about how like candles form. I'm gonna cover this like a bunch today. Like you're gonna understand. Why can't I? You can't hear? Oh, never mind. It's just you. Oh, by the way, if my stream ever goes off or something, type in the Mmxm chat because I'm gonna have that open on my phone. You can app me or something there. Okay, hopefully that makes sense to everyone. So let's go ahead and move on. Let's just show you some examples though. Right. So we hit this key level here. It's a reversal candle. So what I want the next candle to do, I want to trade an expansion candle, right? You can view this as manipulation, right, into the key level, and then we want to expand, right? And then once we expand, what can we do? We can retrace. So if you actually look on the daily, you have the same thing. So I haven't gone into the rules yet of the model yet, like totally, but it's the same thing, right? Expansion, we create a reversal candle. So what I want the next candles to do is expand lower. And what you have here, make this like lower. Right, you have internal, right? We want to try this next day higher, but what does it do? We can't displace small opposing run. So inside of here, you're going to have PD arrays. Let me just borrow for this. I'm probably already getting off topic here, but you can see how expansion candles form. It's very simple, right? Sweep the previous high. This is where you want to look for SMT and all that. This is how you actually validate your idea of this being a market maker model. This is very important because you could be um, down here trying to frame a long, and this cannot be an expansion candle anymore um, to the bullish side. Uh, that's very important to know. Right? You have the chain of state delivery, right? And you can see the order flow being respected. So why do we trade expansion candles? Is because that is when we actually get order flow uh, being respected, right? After manipulation. After manipulation is when we get distribution, and inside of distribution, aka expansion, this is when we actually get order flow being respected. And it's going to look the same every time, but we're going to go over that later. Anyways, I'm like getting off topic here, right? So expansion, retracement into the key level, right? An order block. And so this is an expansion candle. So I want to frame a trade ideally off that candle's low. What do I demand? That small opposing run. That's where we use weekly profiles as well. You get that uh, expansion rate. So it's just a weekly internal to external, but not every single week inside of here is going to be bullish, right? So this is why we confirm it with the power of three and all that, right? And the same thing over here, right? So we hit external. If we want to go back into the range, it's going to do it in the first two candles. So let me go ahead and just explain my model real quick. All right, so it's not really my model, but it's like the next day model that T Trades teaches, but I trade the candle too. So here it really is. So like I said, you're gonna form uh, the candle one is gonna form two ways: expansion candle or reversal candle. Like I said, I want if it's expansion candle, I want to frame a trade off the candle's low, the sweep, and it doesn't even have to sweep it. Right? You're gonna see a lot of times it doesn't even sweep. It's just expansion into reversal. and there could be SMT there. But as long as you have that small opposing run, the chain state delivery, all that is fine. But let's go ahead and read this. So once price hits a key level, pay attention to the first candle. It'll only close two ways: engulfing or reversal candle. Uh, Engulfing close, anticipate a reversal off candle one's high or low. This has to create a reversal candle, and we anticipate the next candle to distribute. So what I mean by candle two, it has to create a reversal candle, is if we don't reverse into expansion, it must fail to close underneath candle one's low. That's the rule. So we basically the reversal off a kilo has to happen in two candles, right? I want to see immediate displacement away from a key level. I don't want to see price hanging around like bullshitting. I want to see two candles, right? That's the rule. Um, and yeah, so what's the next one, right? Reversal candle, anticipate the very next candle to distribute away from the key level. If price takes out candle one's high or low, it must create another reversal candle. So what I mean by that, if this is a reversal candle, right, candle one, if we do take out this low, it must create the reversal candle, like I said again, and then the third candle will expand. So this version right here is literally the next day model, basically. It's just a long wick, failing to displace underneath the previous candle's low. We all know this one. Um, but people don't really trade this one. They just wait for candle 2 to close, but I only trade it if we have that small opposing run because that can be an expansion candle. Um, yeah, and then I'll send this to you guys. That's essentially it, I think. And then here's an example, right? So we have this key level over here, right? Just consolidation, right? This candle 1, we're waiting for this to close. We're not trading this candle, okay? Because, like I said, if you try to trade, here's the thing, like if you try to trade this candle off of this low or something, it can't be a expansion candle, right? You're basically fading that candle, right? This can be the weekly time frame, any time frame. You are fading that candle, um, and the expansion is likely to happen next, right? Once we hit a key level, we can expect a new phase of price, and then it's just waiting for that next element of time. So as you see here, right, we expand away like we want, right? After candle one, and then candle one is a reversal candle, so we want to frame that off of that low. So as you see reversal candle, so I expect the next candles to displace higher. And this is where we're going to have the market maker model basically, right? So that's pretty simple, right? And this is fractal, but I'm going to show you guys a bunch of examples of this. All right, so we can see this even here, right? Again, I'm just going to show you this again because you have the reversal candle, expansion, right? Key level. Is this a reversal candle? No. So I want to frame a reversal off this candle's low. You get that. If I want to trade back into the range, what do I need? Well, we have SMT, right? External point. Is this a reversal candle? No. So I want to frame it off the previous candle's high. And then look at all these expansion into reversals. What do they have in common? Small wick, right? So now let's get into some examples. So this is just I guess the same thing I'm just showing you guys. But once price expands into an objective, a new phase of price will occur, right? So this is why we only use this model inside of objectives, right? So swing highs and lows. Let me just, these are the only uh, objectives we're going to use, or POIs, P levels, what do you want to call it? So it's going to be order blocks aligned with order flow. And then we're going to use fair value gaps and then swing highs and lows, my favorite. That's it, essentially, right? And yeah, you can just copy this. It's the same thing. So candle one being a reversal candle, right? We expect the next candles to do it. And then again, if we form this long wick, candle two, we're not really looking to trade this. Remember, only this version, right? We have that small opposing run. And you're gonna have a 1 hour chain of state delivery. That's our confirmation. So confirmation, 1 hour CST. It's just basically like time frame alignment, and then ideally SMT. All right. So now we're going to talk about what's next. IPTA, okay? So it's just basically phases in price. So when we hit a key level, and it's always going to be after expansion. What can happen after expansion, right? We can consolidate, we can retrace, or we can reverse, right? Price is always doing one of these things. This is very important because once we see one of these occur, we know what will happen next. So if price consolidates, we know price has to expand. It cannot reverse. It's going to look like this over here. So we're going to expand into something, right? Maybe a swing higher or low to the left. And then if we consolidate, we know expansion has to occur. So if the daily opens here, we know price will expand. And if it looks like it's going to reverse like this is A and B, right? Expansion, manipulation, distribution, and that low of day, right, would be high resistance. You can trust that. You can trust to trade away from this, right? And what would this create? A small opposing run for that daily wick, right? Um, and yeah, so let's go over here. So we already know what this is. And now it's just retracement. So expansion, we hit a key level, kind of like internal range to external range. We retrace into like a premium discount array. Unlike this, we don't even have to manipulate into anything. We're just consolidating after we take out a key level, like a swing point or something. This is actually retracing into a key level. And once we retrace into a key level, we expect expansion after that, right? We want to create high resistance. Um, away from that key level. So basically like a manipulation almost, right? And we have SMT and all that. And this is expansion into reversal. So it's going to look like a fast move up and a fast move down. You can see that Friday on NQ. We're going to go over that later. And this is all of this right here is basically this fractally. So expansion into reversal, right? It's all this is just reversal. We want to enter after reversal, which is manipulation, because what happens after manipulation? You get distribution. So this is why you don't even have to know that technically if you're just going to use the next day model, because that's just what it is, basically. So let's go over like a little depiction here, right? So let's say this is our drawn liquidity, or the key level we want to trade away from. So right, so price is going to we take out this key level or this swing low, right? New phase of price. We expand towards this key level or this swing low. We consolidate, and if you want to leave this area, you must expand to the consolidation low, and then we can expand, right? So if you see here, we consolidate. It looks like it's going to reverse, something like this. This is just manipulation, right? We know we can't reverse from here because we haven't taken out the lows, right? Once we expand towards the lows, now we can reverse what because of why expansion into reversal right off of this key level. This is just this consolidation low, and obviously this low for this key level, right? We have SMT here, so we want to see SMT at our reversal points, and then once we expand into what swing point highs, now we can see a new phase of price. Because this is important because a lot of people are like trying to enter like way up here right after we take out a swing higher low when we can expect a new phase of price. That's just why this is important as well. So now we're going to use power of three a little bit here. So if we manipulated the previous day, what do we expect the next day to do? Expand. So this is the daily open right here. We make that low into a key level somewhere. We want to create high resistance, ideally, right? Inside of this key level, create high resistance. Then we expand away. So retracement, expansion. We take out this low right here, or this high, and we consolidate and expand. This is kind of like a little drawing there. Do I have anything on this screen? Anything else? All right, let's go into the next one. All right, so this is just the models, right? Just simple. What are we going to frame? These are our framework, right? So we're using power of three in IPTA in combination with our market maker models. So this is just internal range. So this is the daily, right? Just going from internal to external. So what does that look like on the hourly? We're going to have an original consolidation that rests at the external range high. It's as simple as that. Like, you don't even have to draw this shit out. I'm not gonna lie. Um, You don't have to have a perfect consolidation. This is where people go wrong. They start looking for like random consolidations. They'll like go on their charts and look for the last three consolidations and think that's a market maker model. When that's not the case. You need framework. So like you need a key level and then you need to draw liquidity. That's really it. And that's all that internal range, external range is. Um, so what you want to have on the higher time frame ideally is you want to have SMT. You want to have SMT somewhere. Maybe with the range low. Okay, I don't know why I can't draw. Whatever. This is like a glitch. But you want to have SMT on that hourly time frame somewhere. So if there's like a swing low like right here, you want to have SMT here. To swing low, you want to have SMT like there. Or you're gonna have SMT with the time frame alignment. You're gonna have SMT on the hourly, right? Either way, we want to have SMT, right? And again, let's pretend this is candle one that hit the key level. So what do we want candle two to do? That small opposing run, right? Into the uh, order block or whatever key level this is, right? So we're confirming this chain of state delivery on the hourly. And now we're good to go for the next day because we want to show the next day, right? This is when you're going to get the expansion. We're not going to get the expansion this day. Um, and yeah, we want that chain of state delivery. And then this is when we expect order flow to hold, actually, because manipulation's already occurred. We already hit a key level, tracement, expansion. All right, so this is daily internal range to external range. Um, it's simply like you take out a swing low, and we want to draw back into the range, right? Premium discount of the range back to a fair value gap. Same thing, you want to have SMT on that higher time frame ideally. Again, if there's no SMT, I want to see SMT down here, like this or something. And it's the same thing, right? This is candle one, right? So where's the original consolidation? It's literally just the fair value gap low. So the fair value gap low is just a swing point on a lower time frame. Maybe I'll show you guys some examples of that later. But I'll just show you. Let's try to find one. Look, so let's just look at this fair value gap right here. So if I go to the lower time frame, we're gonna see consolidation right here. These consolidations, right? It's just swing points. It's like liquidity. Does that make sense? So that's all that is. We can look here too, right? You have little consolidations and whatnot. But this is heavily overcomplicated. Like you don't have to know that to be honest. Just target the fair value gap if you really want to be that simple. Because that's really all you need to know, honestly. But where was I? Where I was over here, right? No, I wasn't right here. Oh, I was right here. Okay. All right. So yeah, you're gonna have the sell side of the curve essentially. That's all you really want to look at it as. Sell side of the curve. And you're gonna have the right side of the curve, the distribution, right? Um, and this is where you want to look for the opposing side of the curve, PD raise to fail, right? And support price. So if there's a fair value gap here, you want to see reaccumulation inside of here. Um, I'll get into that later. But yeah, this is simple, right? Same thing on all of these models. The same thing. Like literally, candle one hits the key level. What do we want? SMT and an hourly chain of state delivery. We're going to use the daily. So this is my favorite model. You can call it whatever you want. I just call it order pairing ranges because that's kind of what the Mmxm trader calls it. It's literally just like failing to displace underneath the range low and then targeting the range high. Right? So it's just manipulation of the range low, distributing to the range high. Right? We're going to take out the range low, so you can have SMT again, ideally on the higher time frame or the lower time frame, and then this is where you're going to see price, break up CSD. This is going to be candle one, right? We have to hit it with a candle one, right? And then how is that going to form? This is a reversal candle. I want to see an open low, high close. Same thing over here, open low, high close. So this is fractal, um, the way we use power of three with distribution, right? Because inside of this distribution, what are you going to have? You're just going to have candles, right? You're gonna have expansion candles. And inside of expansion candles, like I said earlier, is where we actually respect order flow. If this is an indecision candle, right, or a bearish candle, we have disrespected order flow. And what would this be like a retracement? So if we're gonna expand after retracement, what would we do? We would reverse off this candle's low, like this. But I'll get that later. But to have an expansion candle, we need that small opposing run. Correct, dude. One thing I didn't go over, by the way, is when I don't think I went over this. Is when we make that small opposing run, the farther away we expand from the opening price, the more likely that this candle is to close bullishly, right? Because once we do that, we now are eliminating the possibility of a bearish expansion candle, right? And that's big, right? And inside of when this happens, you're going to have order flow, right? So open low. So now we create an invalidation point. What's the invalidation point? Is this order block? We want this to be respected to it should be priced higher, right? So what do I mean by that? Right. So once we make it open low, high, now we're distributing, right? We expect distribution. Why? Because we have that chain of state delivery. We expect opposing candles to support price now, and we expect order flow to hold. So every time we create a new, you know, uh, order block or whatever validation level, we expect this to be the stepping stone for new distribution, essentially, because all this is forming is a bullish candle. And if we're going to form a bullish candle or any expansion candle, this is where you're going to see that order flow being held. If it's going to be a reversal candle, right? Obviously, we're going to switch bearish inside of here. So if we start to switch bearish inside of here, if we start to displace lower, then now we know that this is likely to be a reversal candle. It's likely to form that way, right? Reversal candles don't do this. Now it can. Inside of this candle, this can happen, but it needs to happen at a key time. This retracement, this deep retracement needs to happen at a key time. And ideally, you have SMT here as well to confirm that. If this happens late in the day, it's going to form that reversal candle, like 100%. It's not going to expand late in the day. But anyway, so that's why it's important um, to understand expansion candles because you're going to have these invalidation points. They're going to reject lows, and once these fail, is when you kind of hands off. You're like, okay, not an expansion candle, possibly. I don't really want to trade this anymore. You're gonna wait for maybe the next day, right? And inside of here, right, even inside of a reversal candle, right, it's still expanded. Like at once, this was a bullish candle, so they still have that small opposing run sometimes, um, but they just close bearishly, right? You can see this a lot, but you can still capitalize on this as well, right? Um, but yeah, hopefully that makes sense. Probably not the best at explaining things, but where we at? Where we at? So we're over here. So hopefully this makes sense to everyone. It's just this is one of my favorite ones. This is like the easiest one too because uh, unlike fair value gaps, maybe there's like a couple fair value gaps in the leg. It's simply just one swing low, and you're targeting whatever high that formed this swing low or the pullback high. It's really simple. Uh, yeah. So now let's go over um, the phases of distribution inside of a market maker model. So basically the right side of the curve, right? So it's always going to repeat the same way usually, very similarly. So you're going to come into a key level, right? This being the fair value gap is the key level, right? And let's say this is candle one, right? So inside of this candle one, if this is a reversal candle with that large wick, you're going to have that smart money reversal. So all that is basically a chain of state delivery you can use. And ideally you want to pair that with SMT because SMT confirms this smart money reversal. And then this is where we expect distribution right after this. So this is where we actually expect order flow to hold, right? You don't just use order flow anywhere and everywhere. You're gonna get really confused. We use it after manipulation, after a key level has been hit, right? Um, and on the opposing side of the curve, you want to mark out a premium discount tool from the smart money reversal low to the terminus high. So your drawn liquidity external range high. And ideally, you want to be a buyer, ideally, in the lower half. Okay. For obvious reasons. Ideally, you want this to happen. Now, second stage distribution. Let me just get let me just go over this. All right. Sorry. All right. So the first break is the lowest buy. So basically, like the 2022 model, right? You can use a market structure. What do you want to do? There's gonna be a PD array always in here. Gonna be a breaker block. Gonna be an order block. Whatever you want to use. A fair value gap. You can make different rules. You can make a rule where you only enter if there's a fair value gap, or if there's SMT. There's so many things you can do, right? Um, and then the retracement into this uh, lower spiral cell, the retracement expansion away. So basically, this range from low to high is going to form a PD array, right? So this order block, fair value gap, and this is going to be the stepping stone for first stage distribution. Okay, and that's what I enter off of mainly because it's just more safe. I already have the confirmation that order flow is holding basically, and so once we retrace into this key level, this is the first stage distribution. It's like the same thing, whatever range the first stage distribution, uh, created, whatever PD array is where second stage distribution occurs. So this fair value I get from range high to low. Um, that's your second stage distribution. And the silver bullet is essentially like it's second stage distribution. It's a part of it. I just threw this in here because it's in the Mmxm Traders course. Um, but it's basically just advanced market structure or high resistance created. So we sweep a low, right? And once we change state delivery, confirming this intermediate term low, there's really two ways you can trade this. You can trade it you just on the high resistance low, the intermediate term low, or you can wait for a short term low to be created and then that be validated. Those really two ways. One way to trade it and two ways to trade it. Hopefully that makes sense. But it's gonna look something like this. Sometimes we distribute in one stage, sometimes we just freaking rock it, but it's going to look like this. Especially the low risk buy in first stage. This right here, bro, is gonna look the same like almost always, usually, right? Um, it's either gonna be an order block, so propulsion block basically, or some fair value gap, right? And then inside of the distribution, what are we gonna have, right? If this is let's say this is I don't know, a 4-hour PD array or something. What are we gonna have? We're gonna have 4-hour open, low, high closes. Or we're gonna have 4-hour expansion candles. The same thing we look for: small opposing run, expansion candle, small opposing run, expansion. Right? It's gonna be the hourly, literally any time frame. We look for this. Okay. And you can use standard deviations to anticipate phases in price. So you want to align these standard deviations with maybe like a swing high to the left, or if there's a swing high right here, right? Then we can anticipate a new phase of price, so consolidation, and then you just wait for that manipulation, or if it's retracement, wait for that retracement into some relevant level. You can wait for SMT again, right? You want to look for SMT inside this whole distribution leg for protected lows, right? And then, yeah, I essentially just use standard deviation for targets, really. But yeah, hope this makes sense. This is the phases of distribution in a market maker model. So let's look at some examples now. So this is Euro CHF for the weekly here. So what do we have here? So just like the model I was telling you guys about, when it creates SMT with that first candle, it's the same rule. So this candle created SMT. It's an expansion candle, right? So what I want to see happen, a reversal off of this candle's high. So this is this week. So I wanted to use like previous price action. And that's what we see here, right? We have that uh, expansion. We look at GBPCHF, you see that, right? Expansion into external range liquidity with that SMT. It's really right here. This is the SMT. So it's essentially like external range to internal range, but this is the weaker asset, right? You can even tell, right? Because we created a much larger body than right here. So you'd ideally want to trade this asset because it's weaker. And same idea. So let's go to the daily now. Right. So this is when we use like profiles, right? So this day here, so Friday, we created the SMT. So what will Monday do? We expect that to expand, right? Expand away. But we expand into order flow, right? So we are technically bullish right now, right? We have this expansion low, or sorry, this manipulation low. And let's just go over the model, right, that I've went over, right? So we have a swing low, a key level. So what is this? An expansion candle. So on to the next day. I need to demand that that what do you call it? Small opposing run. So we take out this low and note the weekly profile. It's right here. So open low, creating a small opposing run into a key level. What do we have? Equal highs at the current high of the week. So we open up, open low. We have all this low resistance liquidity, and now we expect Wednesday low of the week, expansion right throughout the week or whatnot. Right. So we're not just using this alone. We're using this profiles, right? Just power of three. It's the same thing. And so now we head into the next week. So what did Friday do? We hit this candle. So now we're bullish technically, right? We have this tiny fair value gap plus this order block. So what we expect the next week to do? Expand. That's what we do. There's some like little SMT in here. Pretty choppy, right? We expand, consolidate. Why? How is this consolidation? You just have inside barring. So one candle here, three candles inside barring. So we cannot reverse from a consolidation. So we already expect expansion. That's why it's important to know we haven't even really hit key level really. So that's even more confluence. On a lower time frame, we just take all these highs, right? Expansion, consolidation, expansion, right? And then we retrace into order flow. This is where we would want to see this get disrespected if we're going to continue bearish. But what do? We put in that reversal candle, right? So expansion, reversal candle, and we also put on an SMT. So what do we expect this next day to do? Expand, and we expand to the range high, right? And then again, we have a long wick. We want to form a reversal off this wick, and I'm going to show you the lower time frame in a minute. But inside of this wick, you're going to have uh, a CSD, you're going to have the smart reversal and all that. And this is where we just frame a trade to the range low. Right, so we're also using the weekly profile. So what do we see here? So open low. So we have a pretty large-ish deviation from the weekly open, but this is what's important. We're creating a new high of the week. We're creating that manipulation of the high of the week. This little run right here was previously the high of the week. So you're gonna see this a lot. This is gonna confuse a lot of people too, but hopefully you won't get confused anymore. You might see this as the low of the week, which is fine, right? But when we see this, a new high of the week get created, that new manipulation of the weekly candle, and it's also a small opposing run. This is literally how big the manipulation is. That's it, right? Once we see that, and then we're instantly falling back into the range, this is how you know that this range is probably going to fail, right? You have all these lows, right? And then let's go to the hourly time frame so you can see this. All right, so are we going to trade this day bearishly? No, but could you have traded this bullishly? Yes, right? Like I said, we hit that daily key level over here. We can even look right here. Let's start over here on Monday. So remember on Monday, or sorry, Friday, we actually created that SMT in the higher time frame. And what do we need again to trade this candle back into the range, back to internal? What do we need? A small opposing run. Let's go look at that. I'm gonna right. So this is the daily open. So open high, right? Creating SMT, and then we get that chain of state delivery, and now we're expanding away. So now we know that this is, you know, um, an expansion candle, right? We have the small opposing run. We are trading away from this the daily open, so we know it's not going to close bullishly anymore. At the most, it's going to trade like an indecision candle, but we want an expansion candle, obviously, right? So we expanded London session, right? And then in New York session, expansion, what is this? Consolidation. Why? Because we're taking out lows to the left, right? So we can expect this new phase of price. And then how do we, get back in the market, right? Same thing, right? We engage with this swing point high, right? So as you see, we're just consolidating between this little swing point and this little swing point. So all these little inside bars, these three right here. Once we engage this key level, we actually create SMT with this high, right? So what's your market maker model? It's from this high to this low. That's it. And it's the same thing, right? This candle hit the key level, being the swing point high. It's an expansion candle. So what I want to frame, I want to frame a reversal off this candle's high. What do I demand? A small opposing run, SMT, key level, all that is checked, right? So inside of this candle, you're going to have the same thing. You're going to have the stages of distribution. So you're going to have this. Where is it? Oh, I just closed that out. You're going to have this essentially, something like this. Okay. And like I said, if you're going to trade the candle too, um, if you're going to wait for that reversal candle, you're going to miss this. So this is why I trade this because I can actually catch this. And there's an objective approach to it, right? So yeah, this is the one of the models. You have failure swings, right? Anyways, let's go to the next day now. What did the next day do? We hit that key level, right? So if we want to trade an expansion candle, if we want to trade this bullishly, we demand the same thing, right? So we open up, open, low. This is London session. All we would need, sorry, this is Asia session. All we would need is that chain of state delivery essentially. And we get that. Um, and yeah, I mean, this is like one of those, like if you look here, it's kind of like an indecision candle as you see, but we still expanded as you see, right? Because we have that small opposing run. There's really no opportunity here, to be honest. We just expand, kind of chop a little bit, right? And then the next day we get that expansion, right? What do we demand again? Small opposing run. And do I need an hourly chain of state delivery here? No, because we've already reversed. I only use chain of state delivery off of the reversal point. So once this is aligned, now I'm just looking for a retracement into a key level. This is obviously retracement Y. We're leaving failure swings. I forgot to mention that. So retracements will leave like failure swings. We'll leave low resistance liquidity. That's what we have, right? And at the low of the day, this is where you want to look for SMT. I don't know if there is. I haven't really checked. Um, but yeah, so as you see, small opposing run, then we expand into the key level. We hit the key level. Now, do I want to trade this lower? No, not really. There's a ways to do it, right? And the ways to do it, you can use the 4-hour candle, right? This candle hit the key level, right? What do I want the next candle to do? Distribute lower. But there's things you have to understand, right? We know this cannot be a bearish candle. We know it's going to close bullish. So you can't have unrealistic targets, right? You can't target way down here because it's likely to come back to your entry, obviously, because it's going to close bullishly. Um, so your target needs to be like this fair value gap. Like that's why. So what do? We expand and then we start to consolidate towards the end of the daily candle, right? And then hold on. We open high, right? And then we create that chain of state delivery. And this is where you can look for trades, right? So what is this? The high of the day, it's London session. So using daily profiles, look at all this low resistance liquidity, right? This is what retracements look like, right? And then this is where you want to look for SMT2. Honestly, don't know if there is any. But yeah, we expand. So look how large this opposing run is. It's pretty large. So again, you can't really expect price to expand way down here, unless there's like news or something. And as you see, we take this low out and then we consolidate. So new phase of price because we took out this low, we consolidate. So once we see this consolidation throughout the uh, New York session, end of day and all that, then we likely know that we're going to expand the next day, right? And what do we demand again? We have all this low resistance liquidity. All we want to see is an open high, right? And then low close. So all we want to see is that high of the day be created at a relevant, ideally a relevant time, but this is Forex, so it can happen in Asia a lot. We want to see it happen at key level, so we create high resistance, right? Take out this high. This is where we want to look for SMTs, right? Like right here or something. And it's the same model, right? This candle hit the key levels. What the next candle do? Expand. Um, and then yeah, so we take out this low, right? It's aligned with this standard deviation. So this is when you get that new phase of price, right? We're consolidating. You have this. So one thing you need to understand as well right here, it's like the same logic. We expanded already. So this candle here, you're kind of in the low end, the discounted area of this candle. So you need to be careful with your targets. Like you can't really expect price to go way down here. That'd be a huge expansion candle. Your target needs to be like right here. Right? Maybe you can project lower time frame projections right here. But if you guys just do this, if you guys just target, so you're gonna have a higher time frame model, draw on liquidity, and you're gonna have like, let me just draw this for you guys. Right? Here's your target and whatnot. Here's your key level. If you guys just do this, internal range here, just target here, boom. Don't even touch the charts. Wait for a new key level to get hit. So you're trading from here to here. All right. You're gonna wait for a new key level to get hit. You run this low out with SMT. Now your model is order pairing ranges from this low to this high. Boom. Don't even touch it. Stop trying to trade this distribution after we hit a key level. Because why? New phase of price can occur. Right? It's lower probability. Um, and yeah, does that make sense? Right? Internal order pairing ranges, internal to external. Now we wouldn't really want to trade um, external back to internal because why? It's opposite of our drawn liquidity. Technically, external range to internal range is kind of trend, right? Because um, in a bullish order flow, you expect that range to hold. So what I mean by that, so like if I want to trade back to this range, right? Order flow is actually bullish, right? So it's obviously kind of trend, right? And you expect this range to hold. Now, there's certain things we look for, and I actually have to go over that too. Let's go over that right now. So this is kind of like everywhere. Like this is kind of so unorganized, but whatever. All right. So inside of a market maker model, always gonna have a range. Okay. You're gonna have a sell side of the curve and the distribution side, right? So let's just draw that real quick for you. All right. So what you're gonna draw out always is a fib or premium discount tool, basically. And what you want to see, if we're gonna be bearish, right? We want to see premium arrays hold, obviously. Uh, where's my tool at? Right? And what do we want to trade away from? High resistance. So you want to purge a high away from this level. So now you're going to draw another one from this low to this high. And what do we want to see? Since we're bearish, we want to see these arrays hold or fail on the sell side of the curve, especially the premium ones, or sorry, the discount ones, because those are sensitive, more sensitive. So once we displace over, it can be mitigation blocks, fair value gaps. We want to see reaccumulation occur. What we're going to have is like PD array alignment inside of here. There could be a fair value gap right here aligned with this mitigation. You want to see that hold. This ideal area is to get in and look for redistribution, right? So once these fail, this is just adding to your narrative, right? But what if they don't hold, right? So like this. What if you do some shit like this, right? So this is very telling. So what you're gonna look for on a failed range, always what you want to look for is there SMT at the opposing side of that range, right? Because if there is, then we can assume also like we we probably came into a key level, right? Obviously. because for one, if we're gonna even trade from internal or external to internal, we need to hit a key level regardless. So you want to hit a key level, right? Is there SMT on the higher time frame? Is there SMT on the lower time frame? And I'm going to show you guys an oil example. Let me try to find that real quick. All right, so let's look here real quick. Let me just show you. So this is the range low, right? Let's just use this for example, right? Range high, this is the kind of key level, you could say. And this is the range low. So if you're framing a reversal off of maybe this order block right here or this fair value gap, what do you want to see, right? Price trade away. But what does it do? It trades away back into some like lower time from order flow, but it creates SMT basically. And then you just place back up. So now we have manipulation at the range low, basically. And once this fails, right? Now we're just respecting price, right? Once we see order flow holding through a range, through each of a range, that range is cooked, you know? So that's what I'm trying to get to you guys here. You want to look for SMT on the opposing side. Where was I? Somewhere around here, right? Damn, where was I? Was that right here? Yeah, okay. So yeah, once we see this, now we can actually flip our bias, and it's gonna be the same thing with candles, right? So let's say this is the 1 hour time frame. Let's just draw like random things, right? Let's say we come to the day like this. Once we see this, what do we demand for the next day? Small opposing run into the key level that was. So we're always gonna open up next to a key level. I forgot to mention that too. Probably forgot to mention a lot of things, but um, every time you open up your chart or the day, sorry, once the daily opens, any candle, you're gonna open up next to a key level, and that's what you want to be respected, right? Because I don't really care about any key levels down here because if price opened up low all the way down here, it's creating that large opposing run, which I don't want to see. I want to see a small opposing run into order flow, and if this gets broken, then I don't want to trade. It's as simple as that, pretty much. So open low into this key level. I want this to be respected. I want this to form the low of the day, right? And once this price leaves here, now I have new invalidation points. Does that make sense? So this is kind of like ranges, how they fail. Or we want to use the opposing side of the curve, PD arrays. We want to see those fail and support price higher, right? Hopefully that makes sense. I'm probably like yapping like so bad. Let's get into some examples. So far, does that make sense, everyone? A little bit or not? Yeah, okay. It can be on any time frame. So I'm gonna go over indices right now. But this is fractal, bro. Like anything, bro. The only difference, guys, in markets is the time element on what time that market moves. So obviously in indices, we don't care about Asia. We don't care really about London too much. We care about New York. Um, that's when we want to trade. But Forex, you can trade Asia. You can trade depending, right? You trade CHF, NZD, you can trade Asia. And yeah, London, it's just about like what time hits the key level. So let's look at this example, right? Let's use the fractal. Um, let's use the model that I just taught, right? So this is just like a normal next day model, right? We have 10 a.m. So first, let's go over like what we see in the hourly. So first of all, let me just go on the weekly, bro. Sorry, I'm like everywhere right now. As you see, this is expansion candle, right? We have the small opposing run. We expand right into a key level. So now we're kind of just creating that. We know it's this candle is not going to form a reversal candle or a expansion candle lower. It can only create a large wick or that kind of like indecision candle, kind of, right? So coming to the day, we have this large ass wick. So if you look inside of this wick, we see expansion into reversal, right? So coming to the day, what do we have? We have a range from low to high, and we're just consolidating between Asia and London. All right, so if we want to trade lower, what do we demand? Small opposing run. You see this? Small opposing run. So when we manipulate this range high, we also create that small opposing run. So now we can expect an expansion candle, right? If we look, we want to wait for openings, right? We want to wait for candles to close to get in, ideally. And this is fractal. Like you can use the hourly here, right? This candle hits the key level. You can trade the candles after. But I tend to use the 4-hour candle. So 6 a.m. manipulation. What do we expect 10 a.m. to do? Right? Distribute, right? So it's basically like expansion, reversal into expansion, consolidation. We can't reverse from consolidation, so we manipulate the highs inside of a fair value gap. It is also aligned with that small opposing run. So now I want to trade the 10 a.m. expansion, right? So let's go here. So we open here. What key levels do we have next to this open, right? Fair value gap. And what do we do? Open high, small opposing run, creating SMT, right? Into this key level. So there you go. There's your high of the day. Or sorry, there's your high of the candle, right? And it's in line with that daily, right? That small opposing on the daily. So my TP was just these lows, right? You can target these lows, all that. Um, but one thing you have to understand, like this is why IPTA is so important. So, right, once we take out this swing low on the hourly, right, this is when you can expect a new phase of price, right? Consolidation. So anyone like getting short, like down here, like they're getting shit on, right? Because they probably don't understand, right? Phase of price or something, right? You just have this swing low, swing high, consolidation. So now look at the new 4-hour candle, right? So it's the same thing. You expand into a key level, this 4-hour candle. So I don't really want to trade after this, right? This candle already did its job. We already hit a key level. If we're gonna distribute lower, it's gonna do it off the open, the next candle, right? Just waiting for that new open. So what do? We open high, sweeping liquidity, creating SMT just like over here, and then we get the distribution lower. And once we distribute to here, right, this is when you should call it quits. We're not gonna come all the way down here. Why? Because of the weekly candle, right? We're not gonna come all the way down here. Like it's not likely to close that way. And I'm gonna show you this as well. I'm gonna show you yesterday's trade, or just like logic. This is why it's important to know how candles form, right? So look at this day. So look, we open low, barely any move lower. You expand away, creating a large body or wick. So when we come back down here to just manipulate the daily range, that's all this is doing. This all it's doing is creating a new like manipulation of the daily candle, new low of the day. So once we see that small opposing run, this is how we know that we're not going to close bearish, right? It's very unlikely to close bearish and come all the way down here because of this huge displacement higher rate. You can actually trade this, and this is what I did. I just traded this little low. Right? So you have this candle here, hit this key level or whatnot, also below the daily open. So this is expanded candle. So what is price going to do? Going to reverse off of this candle's low. You can trade this back to this range into like 15-minute internal, right? You can literally frame trades like very fractally, right? Uh, and you see again, 10 a.m. candle, right? Expansion into a key level. What does this candle do? Going to fall back into the range, the very next candle. Because of that, it's because of how we this candle formed, right? It expanded very far. Once it does that, like I said, it cannot be a bearish expansion candle. That's for one. And the only thing it can be is an indecision candle. But that's very unlikely because of just how large this is. It's not going to close down here, forming that large wick. So you can already expect price to come back to the range. Not to say that it's going to close all the way up here, but it's going to close above the daily open, like bullishly, more than likely. And we can see this on gold as well. Same thing on gold. So look here. This is A succession. We make an opposing run lower, leaving all this lower resistance. So when we come back up, sweeping the session highs, what are we doing? We're just creating a we're just manipulating the daily range again. And we're also creating SMT. So all this is we're framing a reversal off of a swing point, right? And what do we demand? SMT. We demand a small opposing run for the daily always. So we have those two checked off. We have the key level checked off. So now what are we waiting for? The hourly candle to close. Once that closes, what do? Drop down to lower time frame, right? So look over here. I wish I could change the hourly candles. Should do it. So we want to trade expansion candles after that, right? What do we demand? Small opposing run. Small opposing run. You see how that works? It can be even on the 30-minute candle, right? Same thing. Small opposing run. Look at this large opposing run. See how it's not an expansion candle, right? Small opposing run, small opposing run. That kind of makes sense a little bit. So what does this large opposing run do? Creates SMT. So if this candle creates SMT, what will the next candle do? Distribute, because SMT is manipulation. And as you see, once we engage at this key level, we get the chain of state delivery. This is when you get this is when you want to see PD rates holding. This is when that does happen, right? This is when order flow actually holds. Does that make sense in a way? That makes sense how the daily candle forms, essentially. So basically, since we traded away so far away from the daily open, we're not likely to leave this giant wick behind and then expand way up here, nothing. It's more likely to close bearish than it is to be bullish, especially when we create that new what do we call it? That new manipulation and instantly displace back away. So we want to see, right? We can go over to some more examples too. Oops. This is starting to make sense a little bit. New York. Oh, wait, what the hell is this? Can you use New York? I don't know what that means. What does this mean, Beast Boy? NYOR? Oh, so you mean like 8:30 open and 9:30 open? The New Year. Oh my God. So you can use 8:30 open, especially news events. So yeah, I only trade futures. All right, so I'm gonna get into questions later. What is bro talking about? A mentorship? I do not have a mentorship, bro. Quit that shit. All right, so we're gonna go over CL. All right. So what if I told you this is all these 3 weeks right here were all anticipatable with the same model, right? And here's how. We engage this low. That is a key level, right? So what do you want it to have ideally? Is we want to have SMT. So you guys see this SMT here with this low. So this candle creates the SMT, as you see, and it is an expansion candle, right? This is an expansion candle. And so we want to frame reversal off this low. Ideally, we want to have a shallow run. Right, so let's go to daily. So what do we see? We see Monday, right? It's just a what do you call it? A kind of like an indecision candle, just inside barring this candle, and then we get a displacement into another key level. So now this is an opportunity to frame the low of the week, right? Around here, off of this level. And what do we have? All this like low resistance liquidity. So look at this candle here. It engages with the key level. Right. So what I want the next candle to do, expand. Like I said, we don't have to actually take out this candle's low. We can just expand. All we need to have is that small opposing run. This is where you have that SMT though, that I showed you guys earlier. Yeah, come on, bar replay. All right. This is where that SMT occurred. So look, it's the same thing, guys. Like same shit over and over. So look, we have these small opposing run, right? We distribute away, but come New York time, right? Around that new 10 a.m. candle open, we open low, taking out the session lows, the overnight lows, and creating that new low of the day. Now, what do we demand for the daily candle? We don't want to see displacement way down here because what would that do? It would create a large um, wick, right? But what does it do? Creates a small wick and SMT. So it's the same model, right? We hit a key level, SMT. So it's just like the weekly time frame. We hit that weekly swing low, we have the SMT, same thing here. We hit the swing low, we have SMT, we have the small opposing run. So I want to wait for this candle to close. I don't want to trade this candle. I want to trade the next candles. You see how simple that is, right? Same model on the weekly. Now we're using it on the hourly, right? This model manipulates, or this hourly candle manipulates, and this next candles distribute, right? So there's that. So if this candle, this day manipulated and is reversing from that key level, then what do we expect the next day to do, right? We expect it to distribute. And this is where we're going to have the distribution phases. You have this mitigation block over here. Why do I use this? Because it's swept liquidity. This order block is important, right? It swept liquidity and it displaced. This is the reason why we even took out these lows. It formed an imbalance. So I like to use order blocks from the sell side curve that actually did something. I like to use like high probability ones, not just like any random one. That's just me personally, but so yeah. So what do we demand this day? Small opposing run. Like I said, the farther away we displace, the more likely we this is to be a bullish candle. And this is our objective. This is like a low hanging fruit objective. It's like the high of the week currently. Um, it's like the same thing, right? We have this low in a bullish market. We want to trade. Uh, we want to trade below lows inside a fair value gap. So you could have been a buyer here. This fair value gap aligned with these down close candles or whatnot. But when we actually this order block fails, that's fine. We want to see reversal off this low. This is ideally what I want to trade personally, especially if I'm far up into a range. I want to trade off of a low, right? Because I want to wait for new manipulation to then distribute. And then you're going to look for the same thing here. Let's just go look. I don't know if there is SMT here. Doesn't have to be. Let's go look. Mm, mm, mm. Okay, so yeah, there's like SMT like with this low. Okay, yeah. So there is SMT. There's also SMT with the candle low. This is really nice when there's SMT like this. If you guys can see. Right, you see that little SMT right there? That's really nice when that happens. So you have SMT with a swing low and as well as the candle low. And is this a reversal candle? No. Right, so I want to frame an open low, reversing off that candle's low. And yeah, you get the distribution, right? So as you can see, we're always distributing usually after we hit the key level. So candle one, after candle two, after we hit the candle. Or sorry, after we hit the key level. Sorry, I can't talk, bro. Um, you can see the same thing here, right? This candle hits the key level, the next candle we distribute, right? If we're gonna trade, let's just say you're gonna trade a reversal off this high, where are we reversing off of the next candle? Not this candle, the next candle, you know? So it's very fractal. Yeah, so let's go into the next couple of days. I had to go over all this too, but I want to go over this day in specific. Oh yeah, I want to show you guys why I traded this candle lower. So why did I trade this candle lower? It's because I have the weekly candles forming, right? So it has a very large opposing run. So I know it's not going to form an expansion candle. So this is when I can frame a trade back into the range because what do we engage in? A swing point high. We have this sweep of the daily high. So I am just trading back into this range. Inside of this range, there's not a daily fair value gap, but there is a 8-hour fair value gap. Hold on. Am I good? Because I'm getting a lot of pings right now. Oh, I actually didn't know that, by the way. I did not know that. You're gonna have to teach me in a minute. Okay. Okay, so why did I trade back into this range? This is gonna be a little weird, but this is how fractal is, right? I'm going to see what I can I'm just basically looking at the highest time frame swing point I can frame a trade off of, but also a fair value gap. So all I see is this. Right? I see an 8-hour swing point, an 8-hour fair value gap. So all I'm looking to trade is an open high, low close into this fair value gap. Yeah. So this candle hits the key level, right? 2 a.m., 8-hour candle. And this is the 4-hour candle right here. Or sorry, what the hell? This is a new 4-hour open as well as the 8-hour open, the 10 a.m. candle, right? So just like indices, open high into the key level, to the candle one high, it's an expansion candle. So I want to frame a trade off of that. So see how this is literally the same model on all time frames, right? 8-hour swing point, 8-hour candle close. We're just looking at how did this close? Is it a reversal candle? No, it's expansion candle. So I want to frame a reversal off of this candle's high. What do I demand? Small opposing run. If I go to the hourly chart, you're going to see the same thing. You have a swing point, right? You have 10 a.m. open up, open high. That 10 a.m. candle closes. So the first hourly and that 8-hour candle and 4-hour candle manipulates. So what do we expect the next candles to do? Distribute. And notice how all these 1-hour candles have small opposing runs right into the draw. And look at the daily low. So this is why I did it. So at the daily low, what do we have? Low resistance liquidity, right? So do I think this is going to be a bearish expansion candle? No. Pretty large opposing run, right? And I also don't want to fade that weekly candle, right? All I'm trading back to is this fair value gap. That's it. All right. I don't care if it goes beyond it, whatever. I don't care about that. So that's kind of the logic there. Let's go to the next day. So why can we be bullish this day? Well, what did the previous day do? Well, first off, we have this change state delivery, right? And we're starting to align now timeframes with that weekly external back to internal model. Does that kind of make sense here? So now we want to frame a weekly profile. So you have Monday open up here, right? And now what do we demand? Same shit every time. Small opposing run. What do we have here? SMT with RB. If I go to the daily chart here, you can see that SMT here. So it's just like the same checklist every time, right? Very simple. Now let's go to the hourly chart. What do we see? So here's the SMT. This day was fire. Like this day was so fire. I caught both of these moves. It was very clean. All right, so let me just close this real quick. And so here, you can see that opposing run, right? We move down, creating SMT, and now we create an order block. So if you actually look, let me go back to the hourly. I'm trying to find this shit. All right, so this is the uh, yeah, okay. This is the what do you call it? SMT low. Then we come into this key level, right? And as you see, we actually create SMT with this candle. So it's the same rule. So if this candle created SMT, what do I want the next candle to do? Expand. Right. So this is the kind of like time distortion. You're gonna have the 6 a.m. candle, which is not in a kill zone really. You have the 7 a.m. candle. What do I want to see? This is a large body, like small wick. So we can frame that reversal off of that low. That's what you see here, right? And then look over here, you can see the SMT. So this is the SMT, and again, framing that reversal off that candle's low. This is when we expand, right? And then look here, if you're going to use relative strength, you have the 7 a.m. candle, the 7 a.m. candle. On this asset, we CSD. On this one, we don't, but that's fine, right? It doesn't mean we're going to reverse or nothing. It just that can actually give you confidence, right? Because the other asset is uh, displacing higher, right? And this one is just kind of like lagging behind almost. But we have that SMT, that bullish SMT, right? So it doesn't mean we're going to reverse. We have the higher time frame narrative. Um, yeah, don't like freak out there. If we look at the 4-hour candles, what do we have here, right? Open, low, creating SMT, high, close. So we're always in some power of three, bro. Like it's gonna be a 4-hour, a 1 hour, and always the daily. Always the daily, always the weekly, okay? But intraday, you're always gonna be in a 4-hour power of three. And then in the distributions, you're going to be in 1 hour power of three. So you see this little posing run here, right? So this is the reversal. What do we expect the next channel to do? Distribute. So if you drop down here, all right, what do we see, right? We have our chain of state delivery, right? So this is the low risk buy. And what do we have after the low risk buy? Whatever PD array forms off the low risk buy is your first stage distribution, right? So it can be this chain of state delivery first stage distribution. It can be this when we come back. This can be first stage distribution. But notice what we did. We took out external range liquidity, so possible new phase of price, right? This is where we can retrace, but this is where you want to get in, right? Like I said, draw out that what do you call it? Premium discount tool. You want to get in around here, right? Ideally, around that EQ range, not really way up here, right? Because once we hit this high, new phase of price can just take you out easily. This is where you want to get in, and look at the 1 hour candle, right? Open low with that wick, and then once you start to displace, back up. We're creating order blocks. We're seeing the stage of distribution. We're seeing order flow being respected after manipulation, and uh, yeah, pretty simple, right? You can see up to here, right? We manipulate, we expand into a low, we consolidate. We cannot reverse from this consolidation. We must expand again into another level, right? So expansion into a key level, what can happen after expansion? Reversal. Into expansion, retracement, back into breaker block or the series of down close candles. Retracements. When will we actually expand? Well, when that new 1 hour candle opens. Open low, high close, right? Hopefully that makes sense a little bit. And this is fractal. And once you understand this, it's an absolute game changer. So go into some more examples. Oh, yeah. There's another opportunity to stay. Where was it? Where am I at, bro? Oh, yeah, here we are. So we had this fair value up here. So I traded this. Now my target, I'm going to show you guys. The reason why I traded this because it's SMT, and you can see it here. Let me just full screen this real quick. Bar play this real quick. So I'm not really looking to trade all the way up here for this day because we already expanded so much, and it's kind of getting late in the day. As you see, 1300. You can't really expect um, the daily candle to expand at these times. So this is kind of my logic. Was I went down here to this low, and what you have, you essentially have a range high and a range low. We manipulate the range low, right? And we already hit this key level, this hourly fair value gap. And so once we start to expand, You see this little, um, so this candle created the SMT, right? So I expect the next candle to expand into these highs. So that's how fractal it is, and that's what I traded. And let's go to this week. Let's just break down this week a little bit. And then I'll probably be done because at this point I'm saying the same stuff. So how could we be bearish, right? So remember we were trading back into this range from external back to internal, whatever swing point you want to use, right? We're just sitting inside of this fair value gap. So what did the previous week close like? Expansion candle. Did it hit a key level? Yes, right? So what do we want to see? If we want to trade back to external, if we want to trade expansion candle lower, we want to see it a small opposing run with SMT. That's what we get. As you see, we have Monday, Tuesday creates the SMT, and then we get the distribution lower, right? And then we can look on the lower time frames and stuff. I can even go into like this day here, to be honest too. Right, so you see this little fair value gap. You see Monday trades lower into this key level. Now, if we're going to trade lower, we're going to create a small opposing run up and then go down. If we're going to trade higher, we're going to trade a small opposing run lower and then up. It's really that simple. Like it's actually that simple. And then all we see, you see price respecting the long wick. You see price respecting this fair value gap, and we have S&P. So what does the next day do? Right, small opposing run. This is just an expansion into reversal. So there's really no consolidation phases. It's as simple as this. Targeting this high. That's it, right? And these lows or this fair value gap would be the reversal point. Expansion into reversal. And there's really like days like this, there's really no like opportunity side of here. This is when I would use like 4-hour candles. What I would demand is small opposing runs on the 4-hour, and I would trade like the 15-minute. But sometimes like it has to fit the narrative. But you can see it here, right? If I draw down, drop down, I need to go here, right? So this candle here. So you're always gonna have like an invalidation point, like I said. So look at what this candle did here. So it created the opposing run of the day, and it also created an order block. Okay, you get very like creative with this. So 4-hour candle opens right here, and you want to trade expansion candle. So what do we do previous to that candle? Create a higher resistance. We're rejecting lows. We have the hourly chain of same delivery. So what would you expect, right? A small opposing run into this fair value gap, into this opposing candle in the hourly. You can already trade that to go higher, right? To catch this daily move. It's like as simple as that. Um, there's many ways to like use this, but it's all the same. But ideally, I would like to look for reaccumulation. So that doesn't really happen. Like as you see, we just expand, and then once we hit this target, I'm not looking for continuations through that day. I wanna be positioned inside of here to catch this move. Not I'm not really caring about when we come back to the range, right? Because again, new phase of price. Um, yeah, so we hit this key level, right? And then we want to look at what happened inside this wick. The previous day hit a key level. If we're gonna be bearish, like I said, we already have that bearish idea, right? Because of the what the previous week did. It hit a key level. We're inside of a weekly fair value gap. And now what did this candle do? Traded S&T, right? And now we're gonna look for what? CSD. And yeah, that's pretty much it. So obviously I'm not gonna use this 1-hour CSD, it's hella far. You can use like the 30-minute drop down. You have that CSD, right? And then what do we also see, right? Expansion, and now we're kind of just consolidating, right? Kind of into reversal. Right? Reversal is expansion, it's just expansion the other way. And then we just consolidate, right? And then we have that manipulation. So we open high into a swing point. So now we're creating higher resistance at the high of the day. And again, it doesn't matter like what time, like always. Like it can happen because the thing is after manipulation, bro, we just distribute. Like the, Asia can be the high of the day. Ideally, not in like indices though, but sometimes you can still happen. Um, but in London session, we look for the same thing. So, like I said, I would rather wait until we engage another hourly PD ray, and that's what we have here. We just have this swing point right here. So, hourly candle hits it. It's the same thing. Um, in this candle right here, you can frame a trade, right? This candle hit the key level. I want to trade the next candle after. Into what? These failure swings. Or this low right here. It's as simple as that. So you can drop down to the 1 minute even. Um, and if you want to look for another opportunity, right, we expand very far down, and then you can use the 4 hour open, right? So which is right here. So what do you demand? An open high, ideally. What does this high of the 4 hour candle create? SMT, right? If this breaker. So if this candle creates SMT, it's the same role. I want to see the next candle expand, and we just sweep this high out. So off of the sweep, you can just look for opportunities in there, basically. You can go to whatever time frame you want. You have this chain of state delivery. Like I said, sometimes price just melts. And you have this fair value gap, this breaker block. You have a unicorn model here. You're always gonna have a unicorn model, bro. Like almost every time for the low risk entry. If that's your style, that's what you wanna. That's your favorite model. Then this is a really good model for you, right? You have the original consolidation around here, and all you're looking for is like low resistance liquidity rate. You have the manipulation. You can even see it. Like we're just this is an hourly candle high. Lower time frame is just a swing point. Um, and yeah, so you have a stage of distribution here. You have an order block that forms off of that key level. This is when we expect order flow to hold until we get to this low, right? And then once it gets this low, what can we expect? New phase of price, consolidation, right? And then how do we leave a consolidation? Manipulation. Where's that example at? Oh yeah, here. So look, this is a new day, by the way. So if I want to trade expansion again, right, that weekly profile. So now everything's aligned. We have the weekly narrative, right? We have the small opposing run on the weekly time frame. So now I want to trade continued distribution on the daily time frame, which I would need that small opposing run, right? So this candle, or sorry, this yeah, we hit this swing low. So now we have this consolidation. So once we see this, we now know that price has to expand again at least to this low because we can't reverse from consolidation. Right? So when we take out this swing point high, Um, like you can literally trade this if you're a. Uh, I mean, I wouldn't recommend it Asia, but like this is what I mean. Like the high of the day can absolutely be Asia as long as it meets the requirement. Small opposing run into a key level, like we can trade away from that, right? And then uh, I don't really like to trade like these areas down here. Like I already missed the move. Like look how far you're trading uh, in the candle. Or, sorry, the discounted. You're so discounted. Like I wouldn't want to trade that, but yeah, I just wouldn't. But what I would wait for is like the same thing. I would ideally want to trade a 4 hour candle and look here. So we have this fair value gap. So if you're going to trade a candle one, like I said, you need to open up near a key level. And what do? We do? We open up near the key level. We need to have a small opposing run, and then we need to distribute away. That's what we do here. And you can even use the hourly candle, right? You have that small opposing run. Um, and yeah, so then you create this order block. This candle hits the order block. Where do you want to go? External. Kind of like this little fair value up here too. You have that small opposing run because this is not a reversal candle. You have the small opposing run hitting that candle, just like the daily, just like any time frame, and you would distribute this low. And then this candle creates SMT. This is really low in the day, so like it's not high probability, but as you see, like this candle creates SMT, then we distribute lower, and you'd be targeting down here. But like I said, it's just lower probability, just because you're so low in that candle. Yeah, hopefully that makes sense. Maybe. Hopefully, guys. If you have any more examples here, we can do some questions. We can mark up some more stuff. Like whatever y'all want to do now. That's kind of like what I wanted to show you guys was a model that you can pair with MMXM. And it's very simple. Like we can see it everywhere. You have this swing point high, or better yet, this one. I mean, you can use any one, right? This swing point hits this key level, right? What do we want to see if we're going to reverse off of this? Small opposing run, you'd be back in the range. Like I said, now your range is from here to here on a lower time frame. What is going to be inside of these candles? You're going to have order flow. This is the sell side of the curve for the buy side. You're going to have PD rays up in here. So you can use the 4 hour, whatever is visible. Nothing really clean here. You have these mitigations, right? I would use this candle here. Why? Because it swept liquidity, right? And then we also expanded. You can use the body as well. Kind of weird though. Kind of a weird candle to be honest. Um, yeah, you want to align that, right? You do this consolidation, manipulation, and then we distribute, right? This is at 2 a.m. as well. So Asia consolidation, manipulation in London. This is ideally what you want. You're a London trader. This is like A plus stuff, man. You can catch the whole daily candle like this. And yeah, hopefully that makes sense. Same thing over here, right? Open high. What do we, really want to open high to a key level, which is this fair value gap, which is also these swing points. So it's just a consolidation, guys. Like, you ever see inside bars inside of one candle? You see how there's two 4 hour candles inside of one? That's just a consolidation, really. So we have that manipulation, and then you get CSDs. You can use the hourly CSD. You can use a 30-minute, 15-minute, whatever fits your style, bro. But what's important is that small opposing run, and this is how we get the expansion candles. And again, this is an London session again. So if you're a London trader, I wish I was, but that's way too late for me. You're gonna have plenty of opportunities because the high of the day is formed a lot inside of London, inside of these early sessions usually.